was it a little more dovish than the last time that Chair Powell was on? Because it was basically, the takeaway was kind of the same, smaller, maybe not 75 basis point increases, but maybe a higher terminal and a longer stay at that terminal rate. That seemed like what he said last time. Why'd the market react like it did, Krishna?
So look, I think there are a few things going on here. First of all, there was a concern, I didn't really share that, but there was a concern going in that this might be a Jackson Hole moment where Powell would come out max hawkish and try and stamp on the easing of financial conditions we'd seen in the previous weeks. So part of it is just removing that hawkish overhang. But I actually think there's more here. There's more that is dovish and risk-friendly. So first of all, he confirmed slowing in December is pretty much a done deal. Now, he did continue to lean a little in that higher for longer direction. And that's the hawkish offset they need to make sure we don't go nuts when they slow down. But he really didn't break any new ground there. In fact, he might have retreated a tiny bit. He said the peak rate might be somewhat higher than envisaged in September and qualified that this was his personal opinion. And I think he's just careful that not to get too far ahead of where the opinion on the wider committee is. He was more optimistic this time about the prospects of achieving that fabled softish landing. And crucially, we started to see some two-sided risk management come back for the first time in a very long time. That is super important for equities.
Do you think Chair Powell believes that what they've done so far has a significant lag effect? He mentioned that. Because that's what I've been wishing that the Fed would put more weight on. And that is that we don't really know. We see it in maybe housing and in, I don't know, raw commodities, other places. But 3 months from now, if jobs are a lagging indicator, 3 months from now, we may not need a much higher terminal rate. Do you think in his heart, does he believe that? And he just wants to keep talking tough because that's what we need to do to conquer inflation? Or do you really think he thinks it's been ineffective up to this point and more needs to be done?
I suspect it's somewhere in between two, right? I think Powell looks at what is still overall a stronger for longer labor market. And his gut is we probably do need to go a bit higher for a bit longer. But it's really not clear whether that picture, which is backward looking, is a good indication as to where we're going. So it makes a ton of sense to get off this ridiculous 75 basis point a meeting hamster wheel, slow down, and then let the data unfold over the coming months, over the course of the first half of next year. And let the data, not 1 month, last month's data, let the unfolding data over the next 6 months or so guide exactly how far they do or don't need to go on